The BlackRock Bitcoin Fund has currently got $1.8 billion in it. To give you perspective, that is 0.018% of BlackRock's total assets under management. 0.018%. The top 500 asset managers on earth control $130 trillion of capital. If that gets to a 1% allocation, you're talking about a $1.3 trillion net purchase of Bitcoin.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. What an interesting past few weeks we've had. In fact, without even just saying what's going on, looking at what happened in the charts, this is pretty crazy. So what happened was we actually had a very, very nice retest right here. You could see perfect, right? And we did have that bounce back. But what's so crazy is we had this insane wick all the way down here, pushing price down on the ETF news. And then at the same time, 2 weeks later, we have this very impressive, it's actually technically called a tail, but I still call it a wick, to the upside. So it's really putting us in a position where it has a lot of people scratching their heads saying, what is actually happening right now? Are we supposed to be bullish? Are we supposed to be bearish, right? Because I've noticed that pretty much crypto is split into two camps right now, right? There's the Jim Cramers and everyone's saying that it was a big failure and that's it for Bitcoin. Pack up the bags. It was fun while it lasted. And then there's others out there that couldn't be more bullish, with even insane calls of $1 million Bitcoin by the end of this year. I'm not kidding. These are some real things. I mean, it's insanely polarizing right now. And, you know, if we just have a look over here, we did put in a very impressive 6% candle, right? So is it time for us to be getting bullish? Well, again, before I go into it, what I wanted to talk about today was the most logical explanation for why we're seeing what we're seeing. You know, forget the extremes on both ends, forget the super bearish, super bullish. Let's just actually break this down and see what happened after the ETF and why we did in fact see some of that price selling, and should we be leaning more towards, you know, the bearish side of things. You know, I want to talk about the macro. What can we expect over the next 12 months to even 24 months, you know, through the end of the year into 2025? Where could we actually realistically see Bitcoin price? And I also want to go over some pretty shocking data. I'm not gonna lie, when you actually see these numbers and you break them down in your head, it is going to really open up your eyes to exactly the bigger picture at hand, right? And, you know, obviously we're gonna talk about what goes on, you know, after the ETF, but, you know, and before we get into it, I just wanted to talk about something. I feel like this was a little controversial, but it's just me showing you what I'm seeing. So, you know, my video that I put out 2 videos ago, I got a little bit of mixed responses. Some people weren't happy with the fact that I was pointing out the obvious, that we had been bouncing around in this upwards parallel channel for quite a long time. Yes, we had a little bit of break to the upside. We had a little bit of fake outs to the downside. But for the most part, we always, you know, genuinely reclaimed it or found ourselves back within that. But what you could see happen right here was all of this support that had been holding us all through this move, which, by the way, this basically started forming right around this area when Bitcoin was down around $39,000, and then it acted as resistance right here. And the thing I wanted to talk about on top of that is, even if we extended this a little bit lower, right, we brought it down to here, you could see that these still give us the points of contact that we're looking for, right? We had this, even on this crazy wick that we had right here, we still found some support, but then again, it acted as resistance not only once, but also twice. So I do want to talk about the technicals in the charts right now. We can't ignore it, right? We can just look at the news all day. That'd be great. We could just, you know, blindly do whatever they're telling us is going on, right? Or we can take a more nuanced approach to the situation. So I'm going to put the TA at the end of the video because I know for some reason people just get bored out of their mind when we do the TA. So let's dive in and let's first and foremost cover what I think is the biggest question on most people's minds, and that is, why did we see this sell-off after the event? We've heard lots of different explanations for it, but I think that Preston Pish, he was over on Natalie Brunell's channel, he broke it down, honestly, the easiest to understand.
Well, I think there's been a lot of people talking about the GBTC sell pressure that's occurred. I think that something that was missed by many leading into the actual approval is that all these ETFs had to have seeded Bitcoin in their treasury before they went live. And so that buying took place prior to the approval. And then after the approval, people that were buying the paper that represented the Bitcoin that was already in those treasuries that were already purchased on the spot market. And as everybody knows, the price was kind of running leading up to this event. Well, you know, there's some of the rationale as to maybe why it was running leading up to the approval. But then post approval, GBTC, I mean, people that had IRA accounts and they owned Bitcoin in their IRA account, pretty much the only way they could do it was MicroStrategy or GBTC. After experiencing a massive discount in the assets under management inside the GBTC vehicle for, I don't know, a year and a half, I think and they didn't adjust the 1.5% fee relative to all the other ETFs that were being offered at, call it 20 basis points.
Yep.
People were extremely frustrated and couldn't sell that thing fast enough after it got back very close to the par value. So you had all that sell pressure coming out of GBTC. You had, you know, there were inflows to all the other ETFs, which were gobbling up and buying a lot of that. But that offset of them already having purchased their seed amount is the reason why the buying did not match the amount of selling coming out of GBTC here for the first couple days. It seems like maybe it's starting to level out, and maybe that sell pressure has subsided, and maybe we might start to see it run a little bit here.
So most of us know this by now, but it is interesting to consider the seeding, the fact that they had to have some funds available, so they were already purchased, right? So as that demand came in, all they had to do was basically give it to their clients. And then of course we had the GBTC issue. Now there's other things he didn't even mention, right? Some people actually didn't get that good of a price when it came to this, and some of them are looking to potentially tax loss harvest, right? Which is basically when you can sell for that loss. But keep in mind, especially in the US, there is the legality that once you do sell, you can't, if you're going to claim a tax loss and you're going to tax loss harvest, then you have to wait 30 days to purchase that asset back again, right? So that clearly is going to create a little bit of bouncing back and forth, up and down, right? And we again went over that the gold ETF had taken 10 months before it really started to take off. Now, I wanted to turn it over to Fred Thiel. Now, he is the CEO of Marathon. They're a very successful Bitcoin mining company. He's been in the space for quite a long time. He's not one to usually give price predictions, but this is what he had for an outlook for the next 12 months. And it's not only just coming from a Bitcoiner's perspective, but also a macro perspective, right? I know there's the doom and gloom about a recession and this and that and whatever, but I mean, they were called, so basically during the past 2 years, I don't know if you were watching YouTube, there was so much doom and gloom. There was so much, we're going to go into a recession, this is going to happen, blah, 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 blah. And yeah, times are definitely not great right now, but yet we had stocks hitting all-time high and Bitcoin continuing to move up the entire year of 2023 while most people were against it. So listen to what he says, stick around to the end. I think you're going to find value out of this.
So I think you got a number of really good tailwinds. You've got obviously FASB, you have the ETF. You have the halving, which granted it's more of a psychological shock than anything else. You know, as a supply shock, you're talking about going from 900 Bitcoin a day to 450 Bitcoin a day. You know, there are millions of Bitcoin traded a day. So that supply change isn't going to really do a whole lot, but it's the psychology of it. But there are only ever going to be 21 million Bitcoin. We've mined almost 20 million. The amount of Bitcoin actually in circulation today, liquid on exchanges, you know, is somewhere between 1.8 million to 3 million, depending on the day and what's going on with the ETFs. That liquidity will increase likely, but realize a lot of these ETFs, once the Bitcoin goes in there, if somebody's buying shares and somebody is selling shares of the ETF, that Bitcoin doesn't have to circulate anywhere on the blockchain. It's just going to stay in the ETF, like in a corporate wallet at an exchange. And so, you know, there will still be very tight supply. So between all of those tailwinds, there will be demand increase and price will go up. And as you start getting sovereigns who want to hold more Bitcoin, you know, we talked about they want to mine Bitcoin so that they can get their transactions processed. But, you know, listen, there are only about 1 million Bitcoin left to be mined between now and 2140. So no sovereign is going to build up a whole wealth fund by mining their own Bitcoin. They only want to mine Bitcoin as a way to transact and be able to transact Bitcoin and process transactions. And they are going to have to go in the open market and buy Bitcoin. So I think as you add up all these things, there's reasonable, logic that supports an argument where by the end of this year, we should hopefully, and this is my personal opinion, it's not Marathon's official opinion, and this is not financial advice. My personal opinion is that I think we will exceed the prior all-time high by the end of this year. There'll be a sell-off, profit taking, and then you'll see by the end of next year, we'll exceed that all-time high by potentially 2x. And after that, who knows what's going to happen? Bitcoin may repeat its traditional cycles and go into a bear market, or we may be done with bear markets and it's really a macro environment where it's all about global liquidity. To your point, global liquidity will increase this year. I don't think we're going to see inflation fully tamed this year. I don't see the Fed doing max maybe 3 rate cuts. You're not going to see recession across the broad economy. You'll see pockets of recession. The PMI is down, for example, but consumers are still spending. You're seeing housing coming back now as interest rates are, real interest rates are dropping. So I think the economy is going to be a mishmash of signals, but global liquidity will increase. China's about to do a trillion yuan liquidity injection. You're going to see Europe cut rates faster because their economy is in much worse shape than the US's economy is. And you're going to continue to see disinflationary areas of the economy, energy sector, for example. But you also have geopolitical risk, right? You got all the craziness going on in the Middle East. You've got stuff still going on in Ukraine and Russia. And you have the risk for China, Taiwan. So all of that means that the US fiscal spending is going to have to increase. There's nobody putting look at what Washington, the Senate just approved today, a spending bill that the House will likely approve. That is 1.6 trillion. I think it's a stopgap measure. The fiscal spending in the US is out of control. And when you've got $33 trillion of national debt that, oh, by the way, in Bill Clinton's day, he was the last president to have a surplus in the budget. The national debt in Bill Clinton's day was $5 trillion. Right? It's $33 trillion today. Right?
So
the
crazy.
General Accounting Office estimated at the end of Bill Clinton's term that if that budget surplus continued, the national debt would be paid off in 15 years. Yet today it's ballooned to $33 trillion. Right? There's only one thing the US can do to control that debt, and that is either stop spending, which doesn't get anybody elected, or do something that lowers the value of the dollar, that lowers the cost of servicing that debt. And
Which
what
is,
does that bode well for? That bodes well for Bitcoin.
But then, of course, the biggest question about the Bitcoin ETF is, well, what really comes next, right? And I was over on Mr. M's channel, which, by the way, if you guys didn't check out the feed, if you guys don't have that turned on, make sure you turn that on, because I was on his channel, and we were talking a lot, very random fireside chat, just lots of different crazy topics, great time. And one of the things we talked about was whether or not the ETF truly was a sell the news event. Now, I suppose in the short term, maybe you could say, well, obviously, it sold off, so I guess it was a sell the news event, right? Technically speaking. But when you look broader and long term, what you actually realize is it's not the equivalent of, for example, I like to just use the example of, let's say, a crypto token that's on Ethereum or something, and then it goes to a mainnet, right? And it becomes its own protocol. Well, that's usually a sell the news event, because once that happens, what other news are you going to get after that? Nothing. Now the protocol has moved to its own L1. It's no longer a token on Ethereum. That's pretty much it. That's not what happened with the Bitcoin ETF. The Bitcoin ETF, it wasn't a one-off event. It was actually opening the doors indefinitely, forever. Come on in. This is an event that will continue for the rest of our lives, right? But again, what comes after it? And how could we even get to some of those levels if some people are even saying that it is a sell the news event? Well, again, I got to turn it back to Preston Pish, because he talks about 2 cases that could possibly push up Bitcoin's price after the ETF.
The question about like what's going to be the rocket fuel. What I think is lost on a lot is the rocket fuel has already been loaded into the Bitcoin system, and how it gets loaded into the system is through the hodlers of last resort that just kept stacking more over the past 2 years. So as the price is going down, these hodlers that are so convicted into Bitcoin just keep gobbling up more and more and more as that price went down to, how low did we go? Like 15,000 or somewhere in that range, right? People, you saw posts at those moments in time saying, this is it, this thing's dead. Literally the European Central Bank came out and said, this is it, Bitcoin's over. And when it was around 15, 16,000 or something like that. But that conviction and that continual stacking of Bitcoin onto the balance sheet of net producers, people that are actually earning money and creating value in society and exchanging that value that they created for these monetary units that they're then putting on their balance sheet to never come back on the market again. That is what makes it go up in these bull runs. It's one of the two things that make it go up, okay? Because they're sucking that supply out of the system. And it's very different from gold, where once the price starts to run, they flood the market with as much gold as they can put into the market. And there's no difficulty adjustment that's preventing that flow or tightening that flow of monetary units in gold hitting the market. But in Bitcoin, it's very different. And for Bitcoiners that have done the homework and have figured this out, they can't buy enough of this stuff with their retained earnings. And so that's the first part. That's the rocket fuel. The second part is all the additional participants that are starting to see the contrast of the decay of the fiat units in contrast to Bitcoin that are now showing up. And once that price starts to run, what happens is a bunch of speculators step into the market. They might not be here for the long-term value prop, but what they do is they recognize momentum. And so they come into the market because they're like, oh, like Bitcoin has everybody's attention because Bitcoin's up, 150% in the last year? That will get a speculator's attention really fast. Okay. Now, if it goes another 150 in the coming year, let me tell you, it really has their attention. And so what you're doing is you're attracting in a set of investors that are, I don't even call them investors, they're speculators that get sucked into the move. And then what happens to some of these speculators is they then become investors because they figure out what they actually own. Because the whole time that it's going up in these crazy runs, they're saying, what is this? What is this thing? And curiosity can sometimes, especially, and there's nothing more curious than Bitcoin. There really isn't on the planet.
Yeah.
Like, how can this thing that is this imaginary, made up, nothing unit, at least that's how the speculator would see it, is that there's nothing behind this. Why did these people keep on buying this thing? I'm making so much money speculatively, like owning this for the next 6 months. Like, this is crazy. What is it? And then they start doing homework. And then they start learning that it's not just some, made up Mario coin on the internet, and that there's like encrypted energy that's securing this thing, and it's distributed all over the planet, and all the stuff that we talk about all the time. That's what happens to the speculators. And if you keep 20, 30% of those speculators that came in just for price action, this is what sets the next floor of people in the next bear market that don't leave.
Something else to consider, and I know I keep this chart up forever here, but the Bitcoin on exchanges hasn't been this low since back here in 2018, roughly March of 2018. And you can definitely tell that the hodlers right here, I don't know if I'm in the way or if you could see this, but they are obviously stacking their Bitcoin. They are taking their Bitcoin off of exchanges. There's not that much liquidity right now. And going back to what Preston said, and going back to what Fred said, these people are going to wake up and realize over time. Now you have, of course, the speculators, right? They come in and, maybe 70% of them do leave, but the 20 to 30% that stay, they now become hodlers, right? And this also is going to drive that supply shock that we've been speaking about for years on the channel. These things don't happen overnight. They take time. The same thing like the halving. You never see the price instantly spike after the halving, right? It's something that gradually happens over time. The same way that you didn't see the implications of all of the money printing until a little bit later, right? The same thing with the halving. You don't really get that effect until it starts drying up, until there's not as many on exchanges, until the demand gets up to that level, right? And of course, Kathy Wood is still maintaining her bullish stance.
I think some people expected it to hold a little more than it has. But this has not disturbed our point of view at all. We think this is one of the most important investments of our lifetimes. This is a global rules-based monetary system, and it's a very big idea. And we think it's the biggest of all of the crypto ideas out there. So we're very happy to be a part of this movement.
Okay.
Providing more access to Bitcoin. This is the financial superhighway, a public good, and therefore we have priced it accordingly. But we're very excited about the prospects. Our price target, as you know, is quite high if you give us a time horizon to 2030.
Yeah.
But there's a few different camps that we can fall into, right? Obviously, I've been in the space so long, we didn't have any hopes of an ETF back in 2017. We didn't have any hopes of a nation state adopting Bitcoin or even seeing Bitcoin on the balance sheets of large companies. That wasn't anything that we had even thought about. Now, we had always talked about the possibility of that happening, but it always came from more of like a libertarian type space, I guess you could say, right? And, you know, some people, that works for them. Some people it doesn't. It could be a little woo-woo, right? A little, oh, you know, your freedom and, you know, your Bitcoin and all this other stuff. But what about a more realistic approach, okay? Just realistically, what are we looking at right now? And I do want to give a shout out again to British Hodl. I did do, by the way, I was on a podcast with him the other day on Rice Crypto, if you didn't check it out. You know, he has a great way of breaking things down. And when you listen to this realistic approach and he goes over some of these numbers, I would say that this data, this revelation is incredibly shocking. And if you don't understand just how big this is, then I don't know if I can help you, man.
Ultimately, if you're watching all of this and you're going, what do I do here? This is the best time to acquire your position. If you're sitting there, you're not at your 1 Bitcoin or more yet, now is the best time to acquire it. You've got the best asset managers in the world. You've got them pitching Bitcoin to their people. You've got people waiting to acquire their Bitcoin that are going to start rotating into the markets. You've got advisors that are starting to sell into it. You've got liquidity that's going to open up. You've got the Fed that's going to lower the rates. You've got the supply that's going to go from 900 to 450 a day. There is a lot of excitement going on in this market. The BlackRock Bitcoin Fund has currently got $1.8 billion in it. To give you perspective, that is 0.018% of BlackRock's total assets under management. 0.018%. And my thought process has always been that I think that BlackRock and all these other asset managers will get to a 1% allocation. Well, do you know how much capital it would take to get to a 1% allocation for BlackRock? $100 billion equals a 1% allocation. And we're currently at 1.8 billion. That's basically the same 1.8 billion pretty much that's left Grayscale. I don't even think these fund managers have even started allocating yet. BlackRock just announced that they're hosting a webinar to teach their advisors about Bitcoin and the Bitcoin products and all this other stuff. So it's now just starting. Right? It hasn't even begun yet. So what I think you're going to see here, and by the way, $100 billion for a 1% allocation is just BlackRock. That's not including Fidelity and all the others that are out there. There is the top 500 asset managers on earth control $130 trillion of capital. If that gets to a 1% allocation, you're talking about a $1.3 trillion net purchase of Bitcoin. So if I was them and I see a sell the news event happen, all I'm going to do is hold back that capital, just start eating and trimming away at those orders and allow the market to come down and cascade down. Once that selling pressure is exhausted, start increasing the amount of purchasing I'm doing to scalp all of those Bitcoin out in the market. And then really at some point, the demand is going to meet the lack of supply. And that's what I think is going on. I don't even think BlackRock has even started buying. $500 million maximum, in my opinion, between BlackRock and Fidelity at this point. There is so much more buying here to come.
And an even bigger narrative than just that is, getting back to, I think I have it pulled up over here, the debt clock, right? So we know that the US is now 34 trillion plus in debt, and it doesn't look like it's going to slow down anytime soon. Now, there are a lot of doom and gloomers out there that call about, the death of the US dollar and all these other things. And, we do know historically, every fiat, they all have their chances. We've seen the rise and the fall. You could see this historically over time. But there was this clip that was floating around from Ray Dalio that the Bitcoin therapist retweeted over here. And, this could also very well be something that could potentially happen. And you might want to consider owning some Bitcoin, not financial advice, just in case it did.
Indicators of when a fiat currency is going to decline into, a collapse is when those who are holding its debt sell the debt, and the government, central bank, has to print money to buy that debt in large size while that's going down. Those are the most important indicators. So that you can see it, again, I want to repeat, selling the debt so that there's a big supply-demand imbalance, and the central bank having to come in there and buy the debt that no one else will buy in large quantity, so that then there's a currency devaluation. You have those three things aligned, the currency devaluation going down at the same time as those other two things are happening. And that's been a classic. It's like a bank run. They come to the bank, there's not enough money in the bank, and so they have to make up the difference by the printing of money.
All right, so let's hop in and have a look at what's going on over here in the charts, guys. So this is actually, I posted this exact chart over on X if you guys have been following me. I've been posting over there a lot when I'm not able to make these videos. And, we talked about this very simple trend line, and sometimes it really is that simple. What's actually interesting is it not only coincided with this trend up here, but if I actually zoom out to this larger picture, we also had this very, very large ascending channel right here, right? Obviously, this was a little bit of a bear trap down here, but as you can see, we also had a very nice bounce on that area as well. So, it is all entirely possible that Bitcoin maybe does stay above this level. Maybe that is the the short term or whatever you want to call it. Maybe that is just the bottom of this move, and we consolidate sideways in this sort of triangle with this $44,000 resistance, and then maybe we do have that breakout, right? But again, if you just zoom in and you look at this cluster right here, you see all these candles? So yeah, I mean, we did have this wick to the upside, we did have this wick to the downside, but really all of these candles have pretty much closed within this range. I mean, no matter what we've done, I mean, it's been a little bit of an emotional journey here, but basically you're either closing the week at around 41,001 or you're closing the week at around 43,009. So this is basically telling me that we are in sort of neutral territory. Like, you can't really be bearish, right? Because we're just back in the same channel. You could be bullish, you could say it's a consolidation, it's a continuation pattern, but what you want to see is you want to close above basically 44,000. You want to come up, you want to put a candle that closes somewhere above this blue area, right? And this blue area was very important because it was the resistance here where then we had this drop from around 41 all the way down to, what was it, about 28,000-ish. And, then we had it as right here, it was acting again as support. Oh, I forgot this, back here as resistance. It was kind of dancing around this area, right? Resistance as it fell down. And now we're inside of that area. So again, if we were to fall down, my lowest target, if we were to go, I don't think you'd see Bitcoin fall lower than around $30,000. Now, of course, you could have a situation where due to what's happening on the exchanges, maybe we have a liquidation cascade, and that's why you could, maybe if we came down here, you could see some wick that tries to come down. But I think ultimately, you'll probably see some type of support on this major trend. Now, if we were to lose it, and again, like I said, you switch it over to the daily, okay, you switch it over to the daily, what do you see on the money flow? You see the money flow, it looks like it's curving to the downside. So you would say that on the short term, maybe we should be neutral to potentially even bearish, right? But if you switch it over to the weekly, it is a totally different picture. What you have on the weekly is you have this beautiful anchor trigger wave aligning right here, and it looks like the money flow wants to continue to the upside, right? So we are seeing that very positively. Now, we are back above this blue zone, which I did say, really all I was looking for. We closed the CME futures gap, so that's good. And we also were looking for some kind of a retest down around this area because we didn't have anything once we got above that area. Well, I mean, for me personally, the level was around 38,200. The low of this candle was around 38,575. So was that close enough? I don't know. I mean, you could say maybe it potentially was close enough. And again, as I showed you earlier, we did have this beautiful bounce, but we never actually got back into any of these moving averages. And, historically, we tend to, fall back into these ribbons at some point. It even acted as support right here during the later stage of the bull. Of course, once we start going parabolic, it is very possible that we just continue. Now, there is, are we actually going parabolic? Well, I think I have, where is that drawing? Right here. Kevin Svensson's been talking a lot about that. And of course, you can kind of move this line to wherever you want, which is why, some people say that you can't really use a parabola. Again, I still say that it's a possibility. This is my original drawing, so according to this, we're still above it. So, you could say that that's good. The one thing I will mention is being above the EMA ribbon, you could see that once we do get into the full-on bear phase after having those lows, we tend to use it as support, right? And if we come over here, thus far, we haven't even come down to it yet. We definitely got the full-on flip, and it is holding the support. So again, what am I trying to say? What I'm trying to say is that history is kind of playing out the same way. Again, I don't know how the ETF is going to affect that, but we talked about how Bitcoin came to the 0.16. It wasn't at an all-time high before the halving, and we did have a retracement down. Same thing right here, 0.16. Before the halving, price was lower than the all-time high, and we had a little bit of a dip, right? Same thing here, 0.16. We're having a dip. So this tells us that if you're going to at least go to the 0.382, that says that at some point in the next 3 months, you're probably going to see a $36,000 Bitcoin. And I know that people don't want me to say that, but guys, this is just what I'm seeing here on the charts. But again, we are not bearish at all. You could see we've actually crossed the Gaussian channel from red into green. And anytime this has happened historically, I mean, you can't really go back to this data because that's like really, really early to pick it. But you could see that Bitcoin basically stayed above it for quite a long time. And then once it started interacting with it, that was really the confirmation that we're probably not going to go any higher. Same thing right here. Stayed well above that, well above it, right? And right here, this was an interesting one. We had the interaction and it actually acted as the support, which we bounced off of. So, that level is sitting at around 30,000. And if you do believe that we're in an area like down here, like maybe we're doing this sideways consolidation before the big move, or maybe you think we're here and we're about to go off the big move, obviously paying attention to this Gaussian channel is going to let us know. If we start falling back into it again, because keep in mind, we were down here in the red, but we were crossing into the green. So now that we've crossed into the green and we're officially above it, you really don't want to interact, number one, with it too much, or number two, fall inside of this channel, right? You definitely don't want to go to the lower end. That's definitely not good. But also keep in mind that this is going to continue to probably move up like it has in the past, right? So as it continues to move up, if we do have those sell-offs, because we're not going to go straight down in a line. This is not going to happen. It's not how markets work, right? So, if we do have a gradual potential sell-off, then, you might not even get those levels. You might only come down to around 34,000 or something like that. Maybe it would just coincide with this area right here. So once again, I'm not trying to be bullish or bearish. Again, we are back above this zone. But we are still just bouncing, we are still just bouncing in between this area. So, between, that 41,000 and 44,000. So neutral really right now. Neutral, not even really bearish, just neutral. Bullish would be breaking above 44, bearish and closing a weekly candle, and bearish would be falling below 41 and closing a weekly candle. So basically, guys, in a nutshell, that's where I'm at. And if you want to look at a super long-term trend, this 50 moving average is a really good telltale of when we've pretty much bottomed out. And, once we tend to interact with this area, especially for a prolonged period of time, that's usually the final accumulation area. And that area was right here. In fact, we actually fell below it. So, now that we found ourselves back above this area, for me personally, it's difficult to be bearish outside of potentially maybe sideways to maybe down for the next 4 months, 5 months. And that's the bearish scenario, right? The neutral scenario is we just chop sideways, and then the bullish is breaking above 45. So like I said, I still think there's a possibility. What is my percentage? I don't know, guys. I'd say it's more than 50% that we close a candle, that we close a higher high at the end of this year. But I mean, that could mean like literally Bitcoin could go sideways and then like, October, November, December, sometime in that area, it could even be the last week of the year. Who knows? Santa Claus rally, right? We break up to 70K. And that is still the play that I stand by. And I think, you know, Fred Thiel and a lot of these other guys, they also feel the same way. So just wanted to give you guys a little bit of an update of what's going on, put things into perspective, let you know that, you know, even if it is this short term sell the news, you know, redistribution, moving around of funds, grayscale, Bitcoin selling, all that, I think it's a lot of noise. And I think anyone freaking out right now, you know, obviously we had the really bullish video where I was talking on the phone with, you know, a friend of mine who works in the industry and says you should be absolutely bullish, you should be, you know, backing up the truck. And then, you know, I'm also just saying that there's a possibility that if Bitcoin plays out the way that it has, and, you know, we do have a bit of a breakdown, that it could potentially be a little bit of a sideways accumulation area. But again, I don't see us going down to 25, 20, like full-on bear market. I just don't see that. I don't, there's nothing in the charts that is telling me that, and there's nothing fundamentally that's telling me that. So that's where we're going to end today's video. I hope you guys kind of understand where I'm coming from. I try to show you as much of an equal picture as possible. Of course, it's a little difficult. You know, I am a Bitcoin bull. I am a Bitcoin perma bull. I truly am, but I try to be realistic, you know, maybe on these short-term moves. But again, I think that we are in dip buying season, and I'll say that again. If we do get these levels, if we do get some kind of crazy flash crash or something, if we even get that, because there's a lot of people that are waiting for that. There's a lot of people that are waiting for 30K. I know they are because I can see it in the charts. I know what other people are looking at. So are they going to get that opportunity? You know, it's a self-fulfilling prophecy to an extent, but are we really going to allow them to get another opportunity to buy that cheap again? I don't know. I don't know, guys. So that is it for me, though. Thank you so much for coming back to the channel. If you guys do want to learn how to trade, make sure you check out my Apex tutorial and also take advantage of Levex. They're a centralized exchange. They're still running the promotion, $5,000 trade. They will match it for free. You can literally trade it. If you make money, great, you can keep it. If you lose it, well, it was free money anyway, right? So check that out below. And they're doing also 10% trading fees back for life if you use my link. So that's it for me, guys. Thank you so much. I love you. Hope you have a great day. Until next time, stay crypto. And of course, peace out.